Everybody raises and raises their tariffs. Nobody wants to live in a world where everybody is tariffing every other country's goods.
Or you go local, right?
Or you go local, right?
Or you go, and some things you can't. You just can't eat avocados in Singapore.
That's the thing.
Little Farms goes out of business.
Immediately. Little Farms is immediately out of business.
They're like, oh shit, there goes our business model. Hello, and welcome back to the 6040 podcast, the only podcast that deep dives Asia's business and tech headlines from the leaders actually driving the change. Today is just me and Prashanth holding down the fort, but never fear, because we were joined by one of my favorite people to talk to, Hsu Ken Ooi, founder and partner at Iterative. Today, we're going to go deep on how AI affects startup building and VC funding, economics, as well as general sentiments on Southeast Asia's startup scene. We're going to touch on some highlights from the week, such as the freshly breaking news about Trump's Liberation Days, as well as some Grab and GoTo acquisition rumors. Before we begin, I will note that none of us are professional journalists or investment advisors, so all opinions expressed on this show are for informational and entertainment purposes only. Okay, first up on the docket is a question that I've been asking basically everyone I know, which is how does the AI and the rise of AI native startups change the startup and VC ecosystem? And I think we should take this from two different angles. One is from the startup side, and then one is from the VC and the fund economic side. And yeah, so let's kind of separate those two. Okay, first off on the startup side, there's a chart from a few months ago now. It's kind of old, but it maps out, 7 AI native companies. It has some really well-known names in there like Cursor AI, Perplexity, I think, and how long it took them to reach scaled ARR, annual recurring revenue, and then the number of employees that it took for them to get there. And so I think this was going around Twitter, and people were like, the AI is changing the startup building game. People can scale with a lot less people. We don't need it's just going to change everything. So, Hsu Ken, what are your thoughts on this chart? And do you believe the hype?
Like all things that I think about, there's a lot of nuance to this. Actually, my most impressive thing I thought about when I thought about that chart was not what I think most people got. I think most people grappled to how many people worked at those companies and how much kind of the revenue was. But the thing that I grappled onto was actually the amount of revenue in the short amount of time.
Right.
And so I think that part is kind of not as kind of surprising in the sense that like we are just in this place where AI is like this very kind of transformative kind of technology, and these are very obvious use cases for it. And so it kind of just happened quickly. And so on some level, I don't know the people at these companies, but I bet those founders actually wanted to hire a lot more people, but it just went so quickly that they probably didn't have time to kind of like hire as many people. And so actually, I think the impressive part is just how quickly like product market fit happened for them so that they could scale into these things. Now, the number of people that have worked at companies has been like, welcome to software. Like that's kind of what software is for, right? WhatsApp sold for what, like 20 billion and had like 30 people on it. And so this is not like unprecedented or anything like that.
Yeah.
I think the difference is that now this is happening in B2B companies, and B2B companies make revenue as opposed to just like DAUs or kind of like monthly active users and that kind of thing. So it's not that surprising to me, the people on this list. It's just how quickly they were able to kind of make large amounts of revenue coming out of it. And that to me is just a byproduct of like how quickly they got product market fit within the spaces that they're kind of looking for, less kind of the people. But we can talk about kind of those pieces, but that's my kind of initial reaction to that.
Okay. Prashanth, your thoughts? You're a founder in the AI space, I should note.
Look, I think of this in 3 ways, and I've had to kind of force myself to think about this very carefully over the last 6 months because I do operate a very early stage company, and there's so much hype, so much sentiment around all things AI, right? As a founder, I sure don't want to miss a bus if there is one to catch, right? So I've kind of broadly kind of zoomed out and created 3 buckets to think about this in. Like the first is the mindset, right? So I feel it's important to acknowledge that we're moving from what would have previously been known as the information age to what looks like could be the intelligence age, right? And I think this is a fundamental transformation in how we approach work, how we do things, how many people we need to do that work, and how we deliver product or software into our customers' hands. And I think if I were to think about the last time this happened, this would have been like 97, 98 when I was just graduating, and this is how I date myself, was when the internet was just coming alive. And at that point, it was Yahoo and Alta Vista and a few other websites. On an everyday basis, they would list all the different websites that were popping up around the world, all the portals that were coming up. As a new internet enthusiast, you would just go and tinker and see what everyone had to offer. And the internet was so small that you could find it all indexed on one page, right? Similarly, I think what we're finding on a daily basis is that every day there's a new agent, every day there's a new capability, every day someone's coming up with something that looks like a fundamental revision of what didn't exist, maybe 3 months ago, right? So for us as a company, the single most important thing that we can have is a tinkering mindset or a learning mindset towards this. And I think Huey mentioned this in one of our conversations. She said, look, it's a lot easier to learn something new than to unlearn something you've known for a long time. And I think that's what's at play here. So in fact, as an organization, we have just had to force ourselves into this mindset change that everything we've known, we have to remember, but at the same time, we have to be very open to this new mindset of like picking up things, tinkering, and kind of putting together solutions very quickly, very cheaply. And so that's the first point I'd like to drive, the mindset change that's required in terms of how we build software, how we deliver products to our customer. The second is the organization. This is my fourth startup. And the first three, you're absolutely right. We'd raise large amounts of capital, build little pyramid functions. You'd have design, you'd have product, you'd have engineering, and then you would kind of try to get product market fit with like few people in each of these functions. Now it's truly flat organizations. In fact, we just went through this last 4 months, having to basically jettison a lot of people who are, historically large architects or CTOs and CPOs, et cetera. And we've made the organization very small. Effectively, what we have now is young people or young mindset people who want to tinker very quickly and build product that can get in the hands of our customers. And that organization is a lot more productive, a lot more lean, and a lot more efficient in driving these solutions to market. And also, like historically, you'd have like a product manager who would write a PRD, then it would go to design, and they would collect the design, and they would talk to some customers, then they would drive it to engineering, and then the whole process would take about a month or 2 months. Now everything happens in 3 days, right? So the product manager themselves can horizontally scale, the designers can horizontally scale, and the engineers can horizontally scale. So all of them are able to do a lot more than what they were previously regimented to doing. So I was saying that is effectively what has happened is we've been able to kind of horizontally scale each of our functions, and we've been able to accomplish a lot more than we would have been able to otherwise. And the last is, I think, in terms of capital, and I think it's good to hear Hsu Ken's views on this, but I think you can achieve at least product market fit with very little capital. In fact, I think small teams, not like the traditional 2 pizza box teams, but small, like maybe single ramen teams, could actually accomplish product market fit if they can just, embrace this whole digital engineer, digital designer, digital kind of product manager kind of mindset. So a lot can be done with very little capital, at least all the way till product market fit. Then I think the capital plays a huge role in scaling. So that's kind of how we've looked to bucket our world. And so far, so good.
Okay. So I think both of y'all mentioned PMF, and it's commonly said that like the number one thing that an early stage startup needs to do is obviously find PMF, because without it, you're screwed, right? And Hsu Ken, this is obviously what you help your startups do at Iterative. So is it true that AI can help you find PMF faster? And if so, how is it specifically? Is it what Prashanth mentioned, which is that you can just do, as a product manager, you can do a lot more, you can iterate faster, or how?
The hard things about PMF is not building.
Okay.
It's figuring out what to build, right? So it's talking to customers, it's getting insight and all of that kind of stuff. The actual kind of coding part is like not that hard actually, right? And so certainly you can kind of do that with less people, and you can do this with AI and all of this kind of stuff, right? But the real kind of hard things about PMF is like, what is the thing that you understand about this space that nobody else really understands, and what is your contrarian kind of view? And so you can certainly launch more experiments. You can certainly kind of do so. So your velocity at which you're learning will kind of go up, right? But the hard thing about PMF was never engineering, and it was never kind of like any of that kind of stuff. It was all of this. And I originally grew up as an engineer and originally kind of like studied engineering. In my first company, we were 4 engineers, right? And we spent all of our time coding, and that was absolutely the wrong thing to do. And so to me, I'm like, oh, okay, we can now code faster. It's like, it doesn't actually help super, super early stage companies. And In fact, most of the companies that go through our program, they're like, oh, we're going to have to spend the 12 weeks of the program coding. And I'm like, haha, you're not going to code at all.
Right.
Like you're going to spend all your time trying to sell this product that you haven't built yet, right? And so like, advances in AI to help with that kind of are like a not as much. So the hard stuff is still hard.
But it does shortcut the product development cycle, right? Because you talk to customers, you have some sort of insight, you need to build some sort of like MVP or something in order to test it. And so the AI can help you build that MVP faster, test it if it doesn't work. So like if that process used to take like, what's normal, like 8 weeks or 12 weeks to do an MVP, like, I don't know.
But here's the thing. I think if you're an early stage startup founder and you are good, that takes you 3 days. Takes you 2 days anyway.
Without AI.
Without AI, if you were good, right? Because we weren't actually kind of coding it. We're doing a lot of no code. Like most of our experiments, we don't actually code. We're just trying to sell stuff we don't have and all of this kind of stuff, right?
It's like the fake window, fake door,
fake doors and all this kind of stuff. Now, there is gains to kind of be had, right? Now I can kind of run more variations. I can kind of do some of this. So I don't want to say that there's no gains to be had. There is gains to be had. You can run more experiments. You can do some of this kind of stuff. But I'm not as so far as kind of like, oh, this kind of makes PMF kind of like easy. PMF is still the hardest thing to kind of like get, right?
Yeah.
And so it's a tool. It allows you to kind of do things kind of like faster. But you still have to, the hard stuff is still hard, right?
I'll agree with one thing, and perhaps I'll hold my own on the other one. I think every startup has limited amounts of runway, which is capital determined. And so the number of shots and the number of reloads you can do in that runway is ultimately determining of like your success or failure, right? So I think the main point here is you can run very quick experiments. You can kind of iterate on those experiments relatively quickly. The reloads are much quicker. The ability to run many more in parallel to figure out what's working and what's not working. That's another big change I'm seeing. But yeah, ultimately, product market fit is not just like how many products you can launch. It's perhaps how many theories you can test and how quickly can you learn from what the customer is telling you. And one area where I do think things are a little bit different is often what you see in research and what you hear from customers, and then what you put out in terms of even the fake doors lead you to certain hypotheses. It's only when you actually put a product out that you realize that maybe somewhere there was some bias that kind of crept in, and then you basically learned the wrong thing or you heard the wrong thing. And that's an area where we have seen being able to kind of get to the prototype stage and putting that product out. By reducing the cost associated with that, again, you get a little bit more efficiency in terms of that learning and the accuracy associated with that learning. So frequency and reloads, I think, but yeah, mostly to Hsu Ken's point, I think that's where we've seen some benefit.
I think maybe kind of two things to kind of add here. One was, I think we could do it in kind of 2 days because we could just cut down kind of MVPs to kind of like very kind of minimal stuff. That was kind of the thing.
Yeah.
And so there's almost this weird thing that might end up happening where if these things are too easy, then people will kind of like not put as much thought into them and not get good at kind of the things where it's like, okay, you should cut it down, right? So if you can just reload and run a bunch of experiments, you might just actually just run a bunch of experiments, but you didn't think that hard about it, right? And so there is kind of like, the best case scenario is if you get a founder who thinks quite deeply about it and can run experiments, right? And then, but you do run into kind of some place now where now that you can make it so easy to kind of do it, people will just kind of do lots of stuff and kind of throw spaghetti at the wall, which is also kind of not great, right? So that's like a new problem that didn't exist before.
As you were speaking, I was thinking about e-bikes. And like, you're like you're grinding up the hill on the bike, and then someone's on an e-bike just like speeding past you, and like there's benefits there. They're getting it faster, but they're maybe not taking it the whole way through. Okay. Prashanth, to go back to something you said earlier, you literally talked about jettisoning people, which is a great mental image as well. But can you talk through that? That is like, so you hired some more traditional CTOs, like more, like what you would imagine to be like a full stack engineering team, and then you realize that they weren't the right fit, or what happened?
Yeah, so look, I think you either embrace an AI first approach or AI native approach, or you don't, right? I think you can kind of sit on the sideline and say, hey, this is just a fad. This is going to go away. It's not going to make a huge difference. There's many, for every reason someone adopts an AI first kind of approach, there's probably 900 reasons why you shouldn't take the AI first. And I've seen a lot of imagery about how an AI first company kind of creates a spaghetti of like very complicated solutions because that's what AI does, versus a full stack engineer who's well versed in the domain creates a very simple, clean solution, right? I just didn't want to end up in two worlds, so we made it very clear that we're gonna do AI first, an AI native approach, and that results in a lot of people saying, "Hey, well, I don't really fully buy into this, and this is not the way I would build it. This is a regulated industry. This is financial services, so I don't believe that the tinkering mindset is what's required here. This requires deep, building for scale before building for speed, right?" And I don't necessarily fault them for that thinking, and I think that thinking is what it is. But an org can't have split brain, can't have two cultures. So we just realized that we wanted to have a culture that was consistent, and that was more important. So we took the approach of wanting to be AI first, and we basically said everything we will do with that mindset. And that resulted in a bunch of people not fitting the exact culture that we wanted to build. And so yeah, that resulted in us kind of having to part ways. So far, like I said, I think we have benefited from this because we do see everyone in the organization, whether that's be DevOps, whether that be design, whether that be product management, or that be engineering. Even sales folks run their own fake door tests now, right? They basically put stuff out on themselves. They deploy it with DevOps, which also uses AI. So across the board, we use AI in every aspect of what we do. We do a lot of quick prototyping using Replit or Lovable or any of these simple front end app builders, and that actually has changed the velocity in the company. Historically, that was a huge challenge. So yeah, we've had to go through that change very painfully.
But the scale part, I think, is interesting because that's not a new AI thing. I mean, when we were kind of running companies, we had a similar thing. There's two types of engineers. There's engineers that want to hack things together and they think this is probably going to break, but I can do it in a week. And then there's the type of engineer they're like, I want to paint the Sistine Chapel, and it's going to take me 3 months, and we're never going to touch this again. And the thing we found early on was basically that those two engineers can't coexist together in the same org, right? And so that was something you have to kind of do before. Now AI kind of makes it even the hackier part even easier, right?
Yeah.
But I'm actually surprised that you jettisoned more senior people, because I thought the thing that I'd been hearing kind of my friends were like, actually senior people are more valuable now, because I always used to think that there was blue collar software engineering. And blue collar software engineering is you're building the basics, like sign up, login, kind of the basic stuff that all products have. And that's all gone, right? So all the blue collar software engineering is that's all gone. And so you kind of just have senior people who are working on the hard problems that the AI stuff is not that good at, or they're employing AI and then editing the output so that they get what they're looking for, right? So I'm almost actually kind of surprised you said that you actually jettisoned more of the senior people. So do you want to talk more about that?
That's a good clarification. So actually, three layers, right? So you have very senior people who are architects who basically spend more time on whiteboards and saying, hey, this system and that system and this service chassis and this double entry ledger and this is how we architect it. And they take months to basically redraw this, right? And then you have the senior engineers who are basically very efficient implementers of their pseudo architects, but they're also very senior engineers who basically have written a lot of software in their lives and know where their gotchas are. And then you have your what you call blue collar engineers, right, which is absolutely bang on. So we've seen a lot of change in the very top, because that's a mindset change. And we've seen a lot of change in the very bottom. In the middle, I think the value has gone up significantly. And these are the people who are basically able to buck this trend. I'll give you an example, right? If you're writing a new loan management software, right, you could go and architect a beautiful loan management software because you have experience having built 3 or 4 of these in your life, right? But any AI, any Cursor, any Claude, any of these things has seen thousands of implementations of a loan management software. And loan management software, to be honest, has not changed in 30 odd years or 40 odd years. This is very stable software. So the architecture associated with that has also just evolved, but not changed fundamentally. So you could start with actually prompting it to generate you one, kind of creating the front end interface and the databases and everything else you need. And then a senior engineer can actually review through that and say, okay, let me try to understand what this thing has built. I can even query the code to see what it's actually doing. And actually, because they know what questions to ask, And I think they've become very valuable. So now this could have taken either a month and a half to build, and you still wouldn't know if you got the right outcome, or it could have taken you 2 days, right? The beauty of the 2-day solution is it's built for maybe speed. And then at some point you say, hey, actually, I need more scale. Which parts of this code are not scalable? And then Claude would say, okay, look, I'm going to have to change this database schema in this way and this underlying database structure to be. And I think that's the beauty of this. So a senior engineer who has some domain knowledge is actually now hyper productive. And that's, I think, the way we have ended up with this organization. So the very, very senior CTO, VP engineering, I think our architect levels have become less valuable to us. And the blue-collar engineers have become less valuable to us. But in the middle, I think we're seeing a lot.
That's the human edge. Okay. So, I mean, this is good. So I think we've identified a few places where humans and AI, coexist peacefully, which is like on the PMF side, obviously, you still need the humans to drive the insight and the contrarian take on what the problem is. And then the AI can support in the product management cycle, but that's not the hard part. And then I think similarly, on the tech side, definitely the blue collar, and then maybe the very senior level, but it's not a skill set issue at that point. It's a mindset issue. But there is a rise in the value of like these, middle senior engineers, but not the top. Yeah.
Seeing this even in product, now that Hsu Ken mentioned it, I'm seeing this a lot in product as well, where now that we have some customers, a lot of the experiments we run on those customers are also AI-initiated experiments, right? So the AI runs the fake door, collects the results, builds all the analytics, sees the funnel, tweaks the experiments based on the funnel conversion. And eventually, when it comes to the product manager, if you may, it's already compared 4 different versions that it's run and what it found, right? So the product manager started off with like, hey, I want to test this hypothesis. Do customers respond positively or otherwise? And is there elasticity here or otherwise? And so they basically just push the objective in. The experiment design and the analytics is to great extent done by the AI. Now, I think Hsu Ken has a point. This perhaps makes us kind of quite vulnerable, and we have a lot of blind spots in this, right? Because what you're not seeing is what the AI is not thinking, right? So, and the unknown unknowns could perhaps be where the innovation was supposed to be had. But yeah, you trade the speed for this outcome, I suppose.
I mean, I think this is just a tool like any other tool, right? They're tools for human beings. And so they should help you kind of do your kind of thing, right? And so I don't kind of think about them as like, I think sometimes there's doom and gloom of like, all human beings are going to be replaced yesterday. Yeah. It's not the case, right? And so these are tools that are for human beings. They will replace maybe some kind of like of the roles that people are kind of like fulfilling. But those people can then work on kind of like higher value kind of roles and that kind of stuff, right? So if you're a product manager, we really want you to spend most of your time kind of thinking kind of like longer term or in places that the AI can't do, and not spending half of your day every day just being like, I got to copy the like metrics out of this test that I did into a scorecard so I can show it to somebody, right? Like, so I think it's just a tool that humans can do. It's still most valuable when kind of humans in the loop. And I think the thing that at least gives me kind of a lot of optimism is AI has kind of played chess for a very long time. And basically human beings lose to AIs all the time in chess. It's very clear that AIs are much better than us at chess. But as far as I know at the moment, AIs lose to AIs plus humans. So the best configuration and the most competitive configuration is still always humans and AIs together, because AIs are very good at a certain set of things. They don't get tired. They can run all the numbers. And then human beings have a bit of intuition. And so to me, that's the best use of these kinds of tools. And I think that's going to be the thing kind of like moving forward, right? Is the best combination is just a mix of these two things, because we're very different in how we kind of think. And so we kind of complement each other. Yeah. And so, I mean, maybe optimistically, that's how I would like to think the world is. We hope. Yeah.
I like it.
And AI lacks intuition, right?
Nothing.
That's the thing. And intuition is super key in product building, right? AI does not have intuition.
Super key in product building, and especially I think in the early stages, right? And then so, I mean, the whole conversation so far has been very much on the early stage. And so, I think we can agree that AI is helping to find PMF a little bit faster. And that's, I mean, a good or bad thing. And so you need less capital in order to find PMF. And that's what the chart shows. And I do think you're starting to hear it from people in the industry. But then I think when you get to scaling, do you think capital requirements change for startups?
I mean, I guess the nuance I would kind of think about here is how aggressive do you kind of like want to be, right? And so I have some kind of founder friends, and basically it's like even when they get PMF, they're trying to raise even more money to kind of capture the market even faster. So a lot of times you're raising money to compete. So let's take Grab, GoTo, and kind of Uber back in the day, right?
Yeah.
They're raising money because it's an arms race.
Yeah.
Even if they had AI, they still would have needed to raise a lot of money because you're using AI, I'm using AI, you're using AI.
Yeah. It's all
So
prisoner's dilemma.
It's all prisoners dilemma. We're all going to kind of fight over this
Yeah.
anyway. So there are some pockets where it's just money is useful.
Yeah.
We need to compete against all these other people. And so we're going to kind of do these things, right? The places where, and then there are some places where you're raising money, maybe kind of like that aren't kind of a competitive. So for example, lifestyle businesses, which as a VC, I spend a disproportionate amount of my time talking people out of venture capital because it's just not the right business model. There's nothing wrong with it, right? But for a lot of lifestyle business and stuff, I think where not as kind of competitive from a resource kind of like standpoint, this stuff is kind of like really good. And so I think it kind of just depends on what it is and kind of where the money goes and what you're kind of like using it for, right? But at the end of the day, markets are still competitive to me. And so unless you have a tool that other people don't have, then everybody else has that tool and you're still competing. And so money is still useful in kind of some of those things. But maybe what the money gets spent on towards kind of the competitive edges maybe kind of changes. But you're still competing against other people with the same access to those tools. And so you still need money for that, right?
I'll add one more or two more. So I think in this latest venture, I think capital has played a huge role in two different areas. One is in terms of regulatory kind of approvals. When you walk into a regulator's office and you put in an application and there's a heft of some deep capital on the balance sheet of the company, I think that gives any regulator some comfort, right? You're not a fly by night. You're not gonna cause trouble. So 1 million and a bunch of AI kind of yahoos doesn't really fully get any gray-haired regulatory kind of person comfort, right? So I think it's important to have deep capital, and it's a great signal to carry. The second is if you're running a lending business, for example, where capital is the raw material and that equity needs to be in the companies in order for the appropriate debt to come in. So on both fronts, I think capital has been of great help. So I think depending on the business, so I think what we'll see is there's probably a lot of small businesses that can pop up that are consumer businesses that perhaps previously people had to raise a lot of money. And similarly, like I think we did see this before, right? Back in the day when I first started working on startups, we had to go get our own servers, right? And then we had to go buy kind of internet connectivity to those servers. And then along came rack space, and then you had to go rack your own servers. And then came EC2, right? And then the game changed. So your cost associated with the capital required to just get going kind of has gone down. That will benefit a lot of startups. Perhaps small amounts of capital can come in, lots of them can exist, quick product market fit, and they could probably get picked up, rolled into a Google, a Yahoo, a Meta, an Amazon for smaller valuations, but still meaningful outcomes for everybody around the table. But yeah, I think, but there's still also businesses where deep amounts of capital is required.
Maybe just to add on to kind of what he's saying, I think talking about it by stages kind of makes a difference, right? And so AI makes startups so much more accessible to so many more people. That is unabashedly good for the world, as far as I'm concerned. That's great. If you kind of have a laptop, you can basically do a bunch of stuff now that you couldn't do before.
Like the 0 to 0.5.
That's fantastic, right? That to me is like absolute win, huge for this kind of thing. Sometimes you raise money because you're like, hey, I'm raising money because I want to go find out if this idea is like a thing or not, right? And sometimes that's a windy path and runway gets short and all of this kind of stuff. So AI is also good there because you're like, well, this amount of money would have bought me 6 months before. Now it buys me 12 months. And so I have a little bit more time to kind of do this, right? Then there's the growth stage where I'm like, this is a thing. I need to hit the gas before somebody else hits the gas. And then money still probably useful there. So maybe if you think about those different stages, that's like how to kind of think about the very early stages. This is like all kind of like good.
It's like the great like equalizer. It's like super democratic, bring it to the people. Okay, so let's go to the other side of the table on the VC side. And then maybe on the VC conversation, we should also talk about like early stage investors versus, like growth and later stage investors. But this does impact portfolio construction, I would say, right? Because then if your startups can find PMF faster and with less capital, as an early stage investor, I mean, Hsu Ken, this is obviously the space that you primarily play in.
Yeah.
Like whatever assumptions you had previously made about like an X amount of however $1 million fund, and it would fund however many startups, you could potentially be funding like twice that many, 3 times that many. Have you guys thought about it from a fund economics perspective?
No, and we haven't thought about it from an economics perspective. That just might mean we're dumb. So that's possible. So maybe we should. I also haven't had a lot of conversations with a lot of other kind of like early stage VCs, particularly about that.
Okay.
I think the pressing thing, at least in Southeast Asia, is that things are quite quiet and kind of like fundraising is hard. And so I think between VCs, it's like, are we talking about kind of this, or are we talking about how it's hard to raise money? And most of them are talking about how hard it's to raise money. But that's true, right? So
maybe it's okay because you can raise less money and still fund the same number of companies.
So the thing that I think is interesting, and this is not a program we've announced yet. We're working on this right now, but maybe this is useful. And my team might kill me for kind of saying this on the record and all of that kind of stuff before. We are thinking about launching a even earlier program where basically you apply with ideas, and we're like, this idea seems interesting, and then we're just going to give you like $5,000 to try it, just to validate the idea, right? And so, and we're thinking like 300 teams. Like super high volume, just send us a video of your idea and we'll like greenlight and give you like $5,000, right?
Yeah.
And maybe to the point, it's like you can do a lot of work now with $5,000, right? To kind of go test this stuff and kind of all of that. And so maybe in the past, $5,000 kind of doesn't get you kind of like very much or kind of anything. And now you can kind of do this in kind of like mass. And so maybe that'll be an interesting exercise to kind of see like maybe people get really far on $5,000 and we should like change our entire kind of like mechanic on kind of like how to do this, right? And so that would be an interesting, I would be curious if more people do higher volume, smaller amount kind of investing, right? Even more than we do.
Yeah.
Absolutely. And this is, if you remember, Maria, this is what we were discussing in episode 0. We were actually talking about how you could, it wasn't 5,000. I think we said 10,000. It was $10,000. 7,000 of that was actually in AI credits, right? And 3,000 was actually a stipend, right? So you could quit your job, and it's 100 days, right? You could basically say, hey, look, you have 100 days to get product market fit. You could be a single person, boy, girl, high school, someone who's been at like, Meta for like 15 years. It doesn't matter. $3,000 and $7,000 of AI credits. You can, go nuts. 100 days. You got to demonstrate that you have customers and that they're paying for your software or paying for your product, right? Whatever that product is. And I think you can accomplish that. You could accomplish that with 2 people. I think there's something to that. I actually 100% think you could cast that net so wide. You could, like you said, 300, 500 ideas. In fact, I was discussing this with someone in the government, and they said, look, we could even sponsor like a 1-year visa, come to Singapore visa. And look, if they successfully launch beyond that, they can stay on that EP. If they don't, then they go back, right? Like, so there's so many things you could do. And now you're not limited to people already in Singapore, or, you could actually have people come from India, people come from Vietnam, or they could do it wherever they are, right? So that's the beauty of this new age companies. But yeah, I'm 100% behind. I think that would be very, very killer.
That's awesome. So on the early stage side, it might ultimately affect fund economics, but not now.
Sorry, maybe the thing I think about with AI often is I think people always think that these changes happen very quickly, and they just don't happen very quickly.
Yeah.
Right? I mean, it's like how long?
Because our structures are still our structures.
The internet's been around for what, like 40 years, and there's still all kinds of stuff that doesn't happen on the internet. So like this stuff,
there's all sorts of stuff that does happen, but yeah,
it does happen, right? But it takes a long time to kind of do it, right? I mean, I think Mark Andreessen famously said software kind of eats the world, and now I think somebody was like AI is eating kind of like software, and so but software is still eating the world, and AI is now eating kind of original kind of software,
right.
And so I think this stuff takes time to get worked through the system in order to kind of like show up in kind of all these places. A funny thing that we've seen when we're investing in kind of AI companies, kind of early stage, is they have insane numbers in the early days. Like the AI startups that we look at, they have way more signups than all the other ones, like 10x more. Like we'll look at a company and they have 100,000 signups, right? And the interesting thing that we find out is they have no retention. And so one of the phenomenons that we're seeing is everybody wants to see the magic trick, but then once you see the magic trick, you kind of don't care anymore.
Got it.
Right? And so there's
these are for AI startups.
AI startups.
Okay.
So there's like some AI startup will be like, hey, you can give us a color and we'll make a song about it. And everybody signs up to make the song, And then you see the magic trick and you're like, okay, well,
because there's no utility.
there's no utility,
Yeah.
right? And so there's an interesting thing happening where some of these things are kind of so easy to make. There's so many things you can make. So everybody's running around kind of making those things. They get crazy signups, but they're not actually really kind of like businesses are kind of utility, right? And so the joke, at least the kind of like amongst kind of investors I know, is kind of like, yeah, great, 100,000 finished. How many of them actually use the product the next week?
Right.
And that tends to be kind of lower. Now, there's obviously AI companies with actual utility, but you're kind of seeing this. In the 20 years that I've done startups, I've never seen that kind of phenomenon where you can get so many people to sign up for something and then kind of it all kind of falls out, right? But the magic trick is really like magic to people, right? And so I think it's like this unique time where it really feels like magic.
Talking about magic tricks, I remember, when the first iPhone came out and you could build apps on the iPhone, the fart apps and the torchlight apps, the colored torchlight apps, right? Like, and I'm like, who wants this? And you'd go in on the App Store and there'd be like 1 million downloads, right? So in some ways, you're absolutely right. I think we're going through the fart app era of AI startups, and I think we'll soon get over it. And I think the real Ubers and the real, Airbnbs and whatever else were internet or mobile native equivalent will come up on AI. And I think that would be a fun day to watch.
Yeah, and just so that people don't think I'm a Luddite despite being a venture capitalist, look, all the stuff that happened in the first .com boom was right.
Yeah.
It just took a lot longer, right? I mean, everybody was like, pets.com, this is like a ridiculous kind of thing. And it's like, that company got sold for like $2 billion. But it was like 10 years later, right? And I think that's the thing with AI is that like, is all of this promise going to kind of make good? Probably.
Yes.
Right? Is it going to happen in the next 2 years? Probably not. Human beings just don't move that slow. Our systems are kind of slow. It takes a long time to work through. So.
Yeah. So actually my next question was, we have seen a spate of senior investment talent leaving a bunch of funds, like very high profile ones. Peak 15's at that list. Mass Mutual we've also covered. And so actually my question was like, do you think that part of it is related to AI and how it's changing fund economics? But I feel like, Hsu Ken, your answer is going to be no.
I don't think so. So unless there's something that,
I don't know. Maybe they were, the way it could be is they were looking at like, obviously, their fund, the management fees, whatever. And they were looking at this like hugely staffed out team. And they're like, you know what, with AI and with things changing at the early stage, maybe we don't need as much like talent. And they were like right sizing their own team in order to match what the fund demanded and then also what they saw in the market.
But I guess it depends on kind of how aggressive you kind of want to be. So here's a case that you could make for actually you should just be hiring more people right now.
Yeah.
So the case that you could make is we are in one of these kind of explosions of innovations, right? And so the first .com boom was kind of one of those. iPhone came out, all the apps kind of like happened, all the social stuff happened. And you want to be the maximum active in those periods, right? So I think before AI, it was like a little bit quiet. People were like, oh, maybe it's crypto, maybe it's not. And so it was a bit quiet. And then when the AI stuff, it's like, all the pets.com and stuff that we're talking about, it's going to get made in the next 5 years.
Yeah.
Right? It's not going to.
So you got to be out there.
So you can make an argument that you're like, we should be raising more money. We should get more management fees to get more people to kind of like do stuff, right? Because we need to like, these companies are going to get made now and we need to win them now. If you look at like VC funds I hate that they use the word vintage. It's so
pretentious.
I was going to say a much more derogatory term. So thank you for
that?
I was going to say douchey, but it's like really pretentious. And if you look at the kind of like fund kind of returns, it's like there are certain years where the vintages across all VC funds are just better, right? Yeah. And it's because some new thing came out. There's a couple of years where it's like the market needs to kind of become efficient. Everybody's going to build towards those things. And so you got to like hit hard in those times. And so you can make a counter argument that like you should actually kind of be doing that. Now, I guess there's a point of this where it depends on even kind of like at what level, because even, how we had blue collar kind of engineers and we kind of this kind of stuff, VCs have a similar kind of like thing, right? It's like, do I need as many kind of like associates writing kind of like analysis memos, or do I use ChatGPT deep research? Well, right. And now I can look at more companies faster, right? I'm like, okay, cool. Just give me 200, write deep memos for all of them. Now I don't need 200 analysts working on this. I can kind of do that. So you can almost kind of process more. And so, but I still think, at kind of like the high level, you still probably need people who are kind of like, what are the stuff we should be investing in? How do I kind of make calls? As a VC, your job is to like, you need to have some contrarian kind of takes. So how do I get contrarian takes? And then the very kind of competitive deals are all kind of like human being winning things where you're like, Mariah wants $1 million and is being offered $100 million. So how do you make sure your $1 million is the one that she takes? Like that's, that's a different kind of game, right?
Yeah. Okay. Last question on this one is, What are market sentiments in Southeast Asia right now?
Which level would you like to take this? At the VC level, at the LP level, at the founder level?
Let's go from the top at the LP level.
Okay. Do you want Southeast Asia LPs, or do you want foreign LPs thinking about Southeast Asia?
Ooh, good question.
Very different.
Yeah. Okay. No, let's do both.
Okay. So Southeast Asia LPs, I think the interesting thing here is a lot of them don't want to invest more in Southeast Asia.
Okay.
And the thing
they feel like they're very overexposed.
They're overexposed, and so they want to actually invest in kind of like other places.
Okay.
Right. So if you talk to kind of like family office B from Indonesia and that kind of stuff, they're like, well, I mean, most of my money's in Southeast Asia. I don't need your help making me more money in Southeast Asia. I'm interested in kind of other places. And everybody basically wants to get into the US. Because I think since with the market the way it is, everybody wants to take less risk. And the US is the one market where you just look historically and it's like, oh yeah, people make money in the US.
Yeah.
Everybody wants to go back to the US.
Yeah.
In 2022, when everything was hot and was frothy, there was a ton of US money that wanted to come out of the US because they were just like, we're making tons of money here. We got tons of money. I want to spread it all over the world. This is going to be great.
It's like new age American colonialism.
Totally. Yeah. Right. And that doesn't kind of happen anymore. Right. So Southeast Asia kind of wants to get out. The American money has retreated back to what we know. And so they're like, stay in America and that kind of stuff. Yeah. And then I think what's interesting is we've talked to more investors in kind of other regions. So like Europe, for example, I've never really talked to kind of European, but we've had more conversations there. The interesting thing that we've kind of had there is the European investors, they want to invest in tech. They don't believe Europe is the place.
Yeah, fair.
Regulations, blah, 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 all that kind of stuff. So they're like, okay. And they probably have their own ins, right? They don't need somebody like me. They would love to put money into the US, but those guys don't return their phone calls.
Okay.
Because the US is so washed with money, and especially kind of like Middle East money and stuff. It's like, if you're a family office and you can write a $20 million check, do you think Andreessen even like responds to your email?
Yeah.
No. Right? And so they don't kind of buy Europe as that, can't get into the kind of US. And so now they're kind of looking in kind of these other places. Southeast Asia is kind of one of the places that they're looking. And so that's kind of been an interesting thing where they're looking kind of other markets because they do want to deploy in, but they can't get into kind of some of these other ones. And so they're kind of into that. They also were not part of the first wave of people that invested in Southeast Asia. I think for the most part, there was a lot of like local kind of family offices that did the first wave of investments. Their money is still tied up in startups there. They're not willing to put more. The US guys have never really come. I think they kind of like
they dabbled.
They dabbled in 2022 because they felt like they had infinite money.
Yeah.
And so the European ones are kind of like on this kind of like next one. Just because you guys will think it's hilarious. We talked to some US LPs, and when we were talking to them about emerging markets, and then about 20 minutes into the call, we realized that what they thought was an emerging market was Europe.
What?
Yeah, and I was like, this is weird reverse colonialism kind of stuff, but they literally were referring to Europe. We thought we were talking about something. They thought Europe.
Not like Greece or like Latvia and
Eastern
Estonia.
Europe.
Yeah, exactly.
No, from a tech emerging market.
London.
Yeah, no, I'm not kidding. They and they didn't get the irony of this, right? But they just thought from a tech perspective, the European tech market was like a emerging ecosystem.
Okay, I mean, that's fair.
It was just funny.
Yeah. Nobody except for Europe's interested in Southeast Asia.
Very kind of like few, unless you're kind of very contrarian, right? And again, we kind of were talking about this maybe before we hit record, but I think the first thing that kind of also comes to is when people are kind of looking at Southeast Asia for the first time and they're talking about VC, e-fisheries is the first thing that comes up.
Yeah.
Right? I don't know how many calls we have to get on and talk about e-fisheries, and I'm like, we had nothing to do with e-fisheries, right? Nothing to do with it. I'm not on the cap table.
I mean, what's their point? Their point is just like the regulatory market is thin and like due diligence is bad. But I mean, no investor is dumb enough to be like, one bad apple means that like ruins the entire ecosystem, right?
I mean, I think for places they don't know, it kind of is that. They're kind of like fearful. They're like, I don't know, Indonesia seems like the Wild West and this kind of stuff. And as my friend pointed out to me, it's like, oh, nobody had that response when Theranos happened.
Yeah, that's what I mean. Yes.
Nobody stopped investing in the US, right? But like when you are in kind of more emerging markets and people are not as familiar with it, that's what they kind of like see, right? And so I think a lot of times people in these other markets think of Southeast Asia and they think about these places as like, not as much governance, not as much kind of these kinds of things. And then these stories just like support their kind of like bias about it already. Yeah. And then you're just hard to kind of break out of that.
So Hsu Ken, I think I have a question.
Yeah.
So does that mean there's not enough capital for all the demand that there is in Southeast Asia, or are you seeing a growing gap?
So I think it depends on, everybody can place their bets on how much demand there is in Southeast Asia and kind of like all of that kind of stuff, right? And so efficient market is like there's enough capital for just the right amount of demand. Unfortunately, in the real world, nobody really actually kind of knows, right? So I think that's kind of a thing. I also think about funding as like, it's so cyclical. I mean, I've only been a VC for like 5 years, but I think I started in 2020 until now, but it's so cyclical, right? And so to me, it's like, my take is, it's probably the hardest time to raise money, but the best time to deploy.
Yeah.
That's it, right? And so if you have money now, I think in 7 years, you're going to look very smart. And if you don't have money now, I think it's going to be very challenging for you, right? And also I think stage of investment also kind of like makes a big difference. So we invest so early, we can basically wait 7 years. Like that's the stage of investment. If I'm a Series B investor right now,
yeah,
I got a 2-year turnaround, 3-year turnaround, like that's tough, right? And so I think the later stage guys are kind of like more pressed than the earlier stage guys kind of like me. And so we can kind of like, we can be a bit more patient, but the late stage guys are kind of like, it's a tougher kind of game. And then the question that always comes with kind of emerging markets is exits. When am I ever going to get my money out?
Yeah.
And again, I think if you're early stage, it's easier to kind of be like, look, this ecosystem is going to develop. These things will kind of happen, but you have
faith in the macro picture.
Right? Yeah. But if you're in like again, if you're in like Series B, you need to actually kind of make the bet that that's going to happen in the next like 2 to 3 years, right? Which is again kind of like a tougher kind of thing to do. But I also think that's probably the case in most places. Like when money is hard to raise, that's typically the best time to actually invest, right? And when money is really easy to raise, it's typically the worst time to invest. And so, but yeah, you know, human nature.
Okay, so VCs are in like a default must stay alive mode right now.
They are in a, how little can I deploy over the longest period of time so that I have like money when the market kind of heats up without my LPs being like, you told me there was a lot of deal flow, but you haven't made any deals. And so I'm going to give you a hard time.
Maybe that explains the exodus of senior management at some VC funds.
I mean, everybody's portfolio looks depressed probably more now, right? Sorry, this might be kind of an interesting thing. We think about markups. So VCs, we have to do markup, TVPI, DPI, all this kind of stuff. But I always think that those things are lagging indicators. Mm-hmm. Right. So in a public market, a stock is traded every single day and you get a new pricing function. Right. And in startups, you get a pricing function every like 2 years, maybe.
Yeah.
Right. And I think the thing that's really interesting is the markups in our portfolio, but we actually get actual kind of like monthly updates from our companies. And so if you look at the business growth in our portfolio, it's pretty strong, but the markups is much weaker. And I think in a lot of times, there's a lot of these companies where it's like right now raising money, I get half the money and it takes twice as much time. Why don't I kind of keep my head down and kind of like keep working on this thing? And so they're less likely to kind of like come out right now. And so I do think there's this like pent up thing where it's like, I do think businesses are kind of like doing well. And that's less to do with kind of macro, kind of less affected by kind of macro stuff. And then there's the actual markups, which are like very affected by kind of macro. But again, maybe my team would be upset at me. But we've been looking at follow-ons in our portfolio. And I think kind of like, the last 3 months, we've seen 10x the number of kind of like deals kind of like seemingly popping up than like the previous kind of like 12 months. Mm-hmm. And so, look, I don't want to say, hey, the good times are back. Look, we're not anywhere close to that, right? But I'm like, oh, that's interesting. Like we actually had to hire an entire person to do follow-ons because it just like came out of nowhere as kind of like much hotter than it was before. And so I don't know, maybe this kind of like changes and stuff, but there's just to remind people that like markups and actual business performance are kind of like not the same.
Yeah.
And there's this like lag period, right?
That's good to hear because I think in like 2022, 2023, we were talking about like zombie unicorns, basically all but dead. And so it's great to hear that it's actually maybe the reverse.
Well, so I think through these kind of stages, there's an interesting thing that happens because like when the markets kind of come down, there is zombie companies for a while, but you can only kind of zombie for so long.
Yeah.
And so if you're like 2 years into the thing, you kind of see all the zombie companies start dying off.
Yes.
And then it's kind of like,
Yeah. We got to do some quick hits. Trump tariffs. April 2nd was Liberation Day in the United States. Happy Liberation Day, Hsu Ken.
Well, yeah.
My fellow American.
I feel more liberated.
Okay, so this is the next round of Trump tariffs. Basically, they impose reciprocal tariffs on all U.S. trading partners. And the idea was basically like if you put a tariff on U.S. goods, they're going to put some sort of tariff back on you. It was interesting because Asian countries were hit the hardest by some of these tariffs. Cambodia and Laos topped the list at 49% and like 48% each, but then China picked up another 34%, which isn't that surprising. Indonesia, 32%, Vietnam, 46%, which is quite a lot. Quick takes on the tariff war. Are tariffs good for anyone? Do they work? Are they effective? Prashanth.
Yeah, look, I think I was more worried about the US debt and that number just continuing to climb year on year. For the first time, someone's here, as irrational as the Trump government might be or seem to be. I think someone talking about balancing the budget, bringing back some sanity to that debt. So in light of that, I can see that, hey, tariffs may be a great way to posture, maybe put some pressure on the rest of the world that the U.S. is not to be taken for granted. That if you impose tariffs on U.S. products and the president does want U.S. manufacturing to come back alive, then you should expect the same for products that you export into the United States, right? I see Vietnam has already kind of started to drop a lot of its tariffs. I see Israel doing the same. And I think it's only a matter of time before countries will start to erode their forex reserves, and they will have to bend the knee, if you may, to kind of bring some sanity to the trade imbalances, right? I think overall, yeah, on face value, tariffs are not good. It's a protectionism mechanism, and that's not great, especially with a country as large as the United States. But with the backdrop of the U.S. debt, which, by the way, the whole world owns, I actually don't think this is the worst thing that can happen in the long run. In the short run, yes, bumpy. And I think a lot of people I know had anticipated a lot of this and moved into like fixed income, gotten out of equities. Everyone's kind of like, hey, look, I'm just going to earn my dividend on my coupon on my fixed income, and let's just let the equities market wash out. But yeah, that's my hot take. I think it was coming. It's not the worst thing that can happen in the long term. I think trade balances are good for the world.
Okay. So the ends may justify the means here. Alrighty.
We'll find out. Haven't seen this one before. We'll find out. Could be the worst thing that ever happened, or perhaps not as bad.
Hsu Ken?
Well, look, I'm not kind of an expert in kind of these kinds of things, but I think it kind of dawns on me that this is also kind of something that is very good. This is something that really galvanizes kind of like Trump's base. And so I think Prashanth kind of has a very kind of like economics kind of like a practical kind of view, which I think is kind of like good. But I think you'd be remiss to kind of think that he wasn't kind of doing this as kind of like a galvanizing his base kind of protectionism kind of like thing, right? Yeah. And so it might be the right thing to do, but there's definitely kind of part of him that's doing this because this is something he can kind of push back and all of that kind of stuff, right? I'm totally with you on the debt. I mean, the U.S. debt is kind of like out of control. I think the thing that I always kind of push with the U.S. debt is that like, I don't think this is the way that I would tackle it. Maybe tackle some of the spending we're doing specifically on kind of defense and kind of some of these other things.
They're trying on that too.
And they are trying on that, yeah. And look, by the way, I mean, maybe to kind of like be kind of nuanced, like, I'm an American kind of like citizen and all of this, and I do vote, and I did not vote for this person. I don't think he's the right character to kind of be in office, right? But I do think some of the things he's talking about, like the government needs to be more efficient. I'm with him on that.
Yeah,
right?
totally.
Now, how we go about doing some of that stuff, we can kind of quibble and kind of argue, right?
Yeah.
But I think that maybe in kind of this day and age when we're talking about kind of political stuff, I think nuance is important. And so I don't think he's fit for office, but I do agree with some of the stuff that he kind of like wants to change, right? And if he thinks tariffs is kind of the right way to do it, then that would be an interesting thing to kind of like see, and he's playing it out. And so, so I think there's kind of like bits to this that would kind of be like interesting, but I think tariffs are like a easy, he also, he's so smart at what he needs to do. Tariffs are a really easy thing for most people to understand, him included.
Yeah.
And so you can just like argue about it, right? Like, and so it's just that it's
like a not complicated.
It's not complicated, galvanize people. Everybody gets excited about it. It's like, it's just like kind of obviously kind of good. And I often think sometimes like politicians, maybe when they're doing the right thing, it, like requires a PhD in economics to kind of understand. And the average person is like, I don't understand how this kind of helps me. Right. Yeah. And so he's quite adept at kind of picking things that an average person will kind of like understand. Right. Yeah. We'll see if it kind of plays out. I think tariffs, different people have different kind of thoughts on like whether they're good or bad, short-term, long-term and all that. I don't know how to kind of wade into that too much, right? But
yeah, I'm trying to take a first principles approach to this, which is like, what you learn in like high school economics is that tariffs are bad. Yep. And so that's kind of what's been drilled in. But then I will say, if you look at the list of like the reciprocal tariffs, you're kind of like, wait, all these countries have tariffs against the US. And it's like, I mean, I'm like, is it fair? Is it not fair? I'm like, I don't know. I somehow believe tariffs are bad, but then if you see it I don't know. I would say maybe it doesn't feel that fair.
I think the thing that'll be interesting to play out is it doesn't seem, I mean, if we're taking the like game theory kind of part of this, there's the like, okay, everybody raises their tariffs. That's not sustainable.
Yeah.
Like nobody wants to live in a world where everybody is tariffing every other country's goods by 90% because then we're all just going to be paying so much more for stuff. So there is a bit of chicken that's going to be played.
Or you go local, right?
Or you go local, right?
Or you go, and in some things you can't. You just can't eat avocados in Singapore.
Yeah.
This won't happen. No guacamole.
And that's the thing that's
Little Farms goes out of business.
Immediately. Little Farms is immediately out of business.
They're like, oh shit, there goes our business model.
No more kombucha. Sorry.
They're like, I did not predict this.
Yeah. Okay. Suddenly I'm against tariffs again because of Little Farms. Save Little Farms. Not really. But kind of like to your guys' kind of point, right? And so it's kind of like, to me, I'm kind of like, tariffs are kind of this like opening salvo in this game of kind of like, hey, everybody's going to raise them. We're going to see who's chicken, like, and who kind of like pulls it back first. And we'll see where the end state of this is. But I don't think this is like a new norm. I think this is like a negotiation tactic that kind of gets played. It'll be really interesting if nobody backs down for a long period of time. Then we're kind of in an interesting kind of waters.
I think most people will back down. I think China remains to be seen, right? Because I do think the U.S. is just, I mean, you hear it even from startup founders from here. Like they love selling into the US because the revenue is the ARPU is amazing in the US. Like it's like you can't not sell in the US unless you're trying to decimate your business. China may be the only exception to that rule. And whether or not, I mean, and obviously anything that happens between the US and China will have massive effects around the world.
But by the way, I mean, even if they keep it up and like, let's say the tariffs remain high and let's say that manufacturing goes back to kind of the United States, right? So let's take the iPhone just as an example. If that remains high and iPhone manufacturing goes back to the US, I guarantee you the iPhone is going to cost a lot more than when it was made in China, right? And like, there's no way that you're going to make an iPhone in the United States for the same cost that we're getting it now. And so I think this is the kind of the thing. It's like local manufacturing, local economy, like great. Who's against that in kind of like principle, right? But I think what it comes down to is like, it's great as long as I don't have to pay more money. And so it's like, that's when you really kind of find out how much you really care about this, right?
Yeah, I was going to say on the base thing, I mean, like think about all the Etsy mom and pop sellers or whatever, where they import things from China and then they have to resell and that's their livelihood. Like, you know, the base might get excited about tariffs until it passes through to their own small business in the US and then, it might not look so good anymore. Okay, last topic for today, Grab-GoTo. So Grab-GoTo rumors are back on. And the rumor this time is that Grab is looking to fundraise $2 billion to finance the acquisition of GoTo. You know, from the TIA side, we hear this rumor like every year or two. So it's kind of like Groundhog Day. But I would say this time there's like a lot more financing details. It sounds like they're really pricing out per share. They're actually maybe looking for financing in order to fund this deal. So it may just come down at this point to like to making the numbers work.
Is $2 billion enough?
I mean, I'm sure no, but it's probably a mixture of like cash plus equity plus, you know, like
not all cash deal.
I doubt it would be an all cash deal. That doesn't really seem to, okay, so Hsu Ken, what are your takes on this?
Well, I mean, I always think about it as kind of like maybe something people don't think about kind of enough when you're thinking about kind of products and kind of startups and that kind of stuff is like games have... I always think of startups having kind of like you play this game and there's times where the game reaches end states. So when search engines first came out, it was like everybody can kind of play this game and there's no clear first search engine and then somebody kind of wins and it's Google. And so basically if you want to make a search engine today, like good luck. Like that game has reached end state. We are kind of at like equilibrium. It's over, right? I kind of feel like for a lot of the ride sharing and stuff, we're like kind of there, right? So we kind of reached end state. And for a while, GoTo seemed to like have a bunch of fight. It was like, okay, we're going to expand out of Indonesia. We're going to kind of do all these things. We're going to do financing. At one point, I had a recruiter ask me if I wanted to be CEO of Gojek Singapore. Like they were like trying to do it. I'm totally the wrong person. You
would hate that.
I would hate that job. They should hire a management consultant, not me. But they had kind of that, right?
Yeah.
And I think in the last 2 years, I've heard nothing of that.
Yeah.
Right? GoTo, I think, is kind of retreated in Indonesia. I mean, they're still here. I mean, you can still use the GoTo app, but like, I don't see marketing dollars kind of being spent hard here. Yep. I don't know. They might still have a local team, but maybe it's kind of skeleton. They don't seem to be like growing that much. And then a lot of the founders have already kind of like moved on, right?
I think all of them.
Yeah. So whenever you get to a company and it's not growing anymore and there's no more founders kind of at the helm.
Yeah.
Then where does it go?
Like finances and the shareholder value and interest start to creep in.
Yeah, you get the PE guys who are kind of like, hey, how do I kind of like make some more money kind of out of this thing, right? And so if the only way that it would kind of keep fighting is somebody there has to have some thesis on like, there's something we should do, we're going to grow and all of that kind of stuff. But sans that thesis, I mean, I wouldn't be surprised if this kind of stuff happened, right? And I think Anthony's still there, still kind of like building kind of new businesses. And so sometimes the winner is just the last person standing, like literally, and they just still have fight, right? I think amongst like kind of founders and stuff, we always kind of say it's like, startups fail. Basically, you run out of money or the founder runs out of fight. And so, there's only one founder in this game with fight left, right? And so...
Prashanth, specifically on the finance part, because like GoTo Financial is obviously quite a big deal in Indonesia, and then Grab has launched like GXS. They also have Superbank. Like, do you see anything? How do you see the financial aspects of this playing out?
So look, I'm not 100% familiar with either of those companies and their deep offerings. I know a lot of them started off by offering small ticket loans to their partners, right? The captains or the partners, and a lot of the financials were driven within that ecosystem, right? There was borrowing and there was like small ticket loans, and I think within that ecosystem, you're just basically capturing more and more lifetime value of that customer by offering them more and more services. But beyond that, to be honest, I don't really know. I know in India the same thing plays out, right? Whether you're Ola or Uber, and you try to take that one customer, which is either the driver partner or the ride, the ride hailer, and you try to kind of diversify, and basically you're amortizing the cost of having them on your app, and you're trying to become a bit of a super app, and that's where the financing and all the other aspects came in, and it's very profitable in the sense that you have a captive borrower, and you can give them daily credit or weekly credit or monthly credit, and typically that goes into fueling the car or the bike. But yeah, that's the extent I understand that business.
Yeah.
But yeah, it's very profitable. It's a big deal. But
yeah, I had heard that. I mean, one investor told me, they were like, oh, they think there's going to be a carve out for GoTo Financial, basically, and then because they don't need a competing product on that one, so there's a carve out for GoTo Financial, and you maintain it, and then you split up the rest of the business.
I have an interesting thought. Who says no? Let's say there's a deal on the table and people are sitting down, right? Which side says no, do you think? If the deal doesn't happen, which side do you think said no?
I think Grab would say no.
Oh, really? Okay. Why would Grab say no? The price is too high.
Yeah, I think the price is too high. And I think so.
Okay.
But incrementally, what is Grab buying here? Are they buying team, traction, IP? What are they buying specifically? I mean, it's not like Grab doesn't have exactly the same market share.
Or like they'd really need the IP that much, right?
I think they're buying like that deep reach into Indonesia. I think they're still not quite there yet. Yeah, the traction in Indonesia specific. I think they're buying the Indonesia market.
I mean, the thing they might be buying is we stop competing against you.
Oh, yeah,
right?
And we stop burning cash against you.
Stop,
yeah, exactly.
Which brings up a very interesting point, right? Then from an anti-competition standpoint, you have a regulatory problem because now you're saying, hey, there's no Uber in Singapore.
Yeah.
There's no Go anymore or Gojek anymore.
Yeah.
You only have Grab, and Grab could systematically just like ratchet up the price of every ride, which they could do now as well. And you just end up in this, last man standing problem. Or last company standing problem.
I mean, I think that could be the case, but I actually doubt that either Singapore or Indonesian regulators would stop it.
Yeah.
Right. Like, I just think both of these two companies are so close to the regulators in both countries that like they can make it happen.
Yeah. Ultimately, then it's not good for the customer.
Yeah. Ultimately, it's not good for the customer. But I feel like that's like a 5 years from now problem or a 3 years from now problem, not like the deal goes through.
Are we going to get another wave of startups that are doing ride sharing? Because it's not Grab overplay buys it.
It's all going to be like robo-taxis next.
Yeah.
Oh, I really want to get in a Waymo.
Me too.
Yeah, I hear that's coming. I thought the Land Transport Authority is looking at bringing in self-driving cars into Singapore, which would be taxis.
I'm down. They will 1,000 times be better drivers than the like 75-year-old uncle driving around. So I'm very happy with that.
Yeah, but like that medallion equivalent in Singapore is very hard to come by, very protected.
Oh, it's the same as New York.
Also the voter base. So maybe not this year, maybe next year.
I mean, that's not too bad. To your question, who do you think would say no to the deal?
I mean, I think it's Grab.
Yeah,
right? I mean, because Anthony's kind of sitting there. I mean, I think it's kind of a price thing.
Yeah.
And I feel like Anthony, if I'm Anthony, I'll let those guys sweat.
Yeah.
Right? I let them sweat, right? It's not an easy business to run. None of the founders are kind of like there. Your revenue is kind of just going kind of like flat. Grab is probably coming, it has kind of like a stronger position and they can kind of wait it out, right? I'll just wait and I'll wait and I'll wait. And when you kind of really kind of want to do this, let me know, right?
Maybe it is a $2 billion all cash offer and then they feel like they only need that much. Maybe a slap in the face.
I wonder how much, especially if I was Anthony and if my market share in Indonesia kept growing, if my business was growing in Indonesia and their business was not growing, even though they dwarfed mine, I would sweat those guys.
Yeah.
Right.
Yeah. It's a matter of time.
Yeah.
Yeah. Okay, on that very positive note, we're going to wrap it for today. Thanks, folks, for tuning in. Thank you, of course, to Hsu Ken for joining us. This was a great conversation. Plus, Prashanth from dialing in from spring break, of all places. As always, you can give us your feedback or nominate topics at 6040podcast@techinasia.com, and we will catch you in 2 weeks' time. Bye.